What is worse, a tax on wages or a tax or a head tax that taxes regardless of your wage? To answer that question, we did this problem in class. And this problem, we're assuming the consumer is making, or the individual is making a choice between wages or work and leisure time. The leisure time is going to be on the horizontal axis in hours. The work is going to be on the vertical axis, and it's going to be on wages in dollars. We're going to assume that the initial wage rate is $20 per hour and that the individual has 24 hours available. So if we draw a budget line, then we'll have something like this. And on this axis, and the horizontal axis, this will be hours, 24 hours. And in the vertical axis, this will be equal to $480 if you work 24 hours at a rate of $20. Now, suppose the person is subject to a wage tax that lowers the after-tax wage from $20 to $10, and that generates $100 in revenue. Well, how does the new budget line looks like? Well, the new budget line will actually shift inside along the vertical axis, and now you use all of your time for working, you're only going to be able to make $240. You still can actually make 24 hours of leisure. You decide not to work for any wage. Since I'm also saying that that the government is going to get a revenue of $100, then you must be working 10 hours to pay that. So we know that the consumption point is going to be right here when the consumer uses 14 hours of leisure and 10 hours of work for a payment to the government of $100. Now we can draw the indifference curve, but I'm going to hold until I do part C in order to draw the indifference curve. Now suppose the government wants to raise the $100 with a head tax, which is a tax that, that you pay regardless of how much you work, assuming that the tax generates exactly $100. Well, the first thing you need to realize is we're going to start from the red line, which is our original one, and we're going to say, well, how does a head tax affect this line, this budget line? And if you remember, the slope of the budget line is given by the ratio of the prices, Px over Py, and a head tax, a tax that doesn't depend on how much you work or how much money you make per hour, is not going to affect either of these two variables. In other words, it's not going to affect the slope of the curve. But it's going to shift the curve down with the same slope. Well, how much more? Well, it's going to shift it down here to 380 because you're going to charge $100. And it's also going to shift it along the other axis to 19 because now if you want to pay the if you have to pay the $100 to the government, you do have to work 5 hours to make that money. Now you can continue this down here and anchor this at a negative sign, and that's fine, but that assumes that you're getting the money to pay the government from someone else. Either way, it passes, the line's going to pass a horizontal axis at exactly 19. And the other thing is important is that it needs to pass through this point here. Let's call this point point B, because that is when you were actually paying the government $100. So, so the new budget line that makes the same amount of revenue, $100, needs to pass through that point. That's kind of the trickiest part of this problem to understand. Now, what we're going to try to see is whether this consumer or this individual will be better off in the red line, in the black line here, the head tax. So this line right here, let's call that BL3, the head tax, or in the blue line, let's call that BL2, which is the one with the wage tax. So first, let's draw an indifference curve with point B and see what's going on here. So if we draw an indifference curve, let's see, we can do this maybe a different color here. So I'm going to do this in kind of orange. You can kind of do it any way you want, but I'm going to make a tangent at that point and have that shape. So this is my, let's call it I1. Now notice that that is the only indifference curve that could be tangent to that blue line, because all of the other indifference curves this consumer have the same shape. None of them touching each other. So that means that there can only be one indifference curve with that shape that is tangent to that blue line. There doesn't exist another one with that shape. Now notice that when the consumer is on the budget line, the black budget line, he cannot stay on that indifference curve because that indifference curve will not be tangent. In fact, the consumer um, was in the black line with a head tax, the consumer will be able to move to an indifference curve, which is farther away from the origin. In other words, the consumer would shift a little bit of work um, and work a little more to actually account for the head tax. So the consumer will be in I1 with a wage tax. The consumer will be in I2 with a head tax. So clearly the consumer is better off with a head tax because he's able to reach a higher indifference curve. We also said that the intuition for this is that a wage tax discourages the consumer away from working, and it limits the person's options. A head tax, it does provoke some pain, but it leaves all the options open to the consumer so that the consumer can actually make switches of his or her behavior in order to try to improve the situation from the tax. So a tax that tax a particular thing, it's usually going to be worse off than a tax that tax the overall income of the overall salary of the consumer.